Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, Vanguard Solo 401k Review 2025, why self-directed beats the basic plan every time. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Please also use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. All right. So again, today's topic is Vanguard Solo 401k Review 2025, why self-directed Solo 401k plans beat the Vanguard Basic plan. So the problem with the Vanguard Solo 401k plan is that it's a prototype plan that lacks certain key features. For example, the primary missing feature is the ability to make Mega Backdoor Roth Solo 401k contributions. And we should also put it in context that Vanguard actually outsources their solo 401k plan to a census. They actually exited the solo 401k industry over a year ago. So if you visit their website and navigate to their solo 401k page, it'll actually take you away from Vanguard over to a census's solo 401k page. So the features that we discuss here are really talking about Vanguard and the Ascensus plan. In other words, the Ascensus plan that you would get through Vanguard. So just like the Vanguard plan, the Ascensus plan doesn't support the ability to make Mega Backdoor Roth Solo 401k contributions. And that's the number one complaint that we hear based on our community, based on experience. There are other missing features as well, but it all stems from the fact that what you can do with the Vanguard slash Ascensus Solo 401k plan is driven by and ultimately limited by their plan documents, which lacks the key features. So the solution is to get a fully featured set of plan documents, but then have your account at the bank or brokerage of choice. Now, since Vanguard exited the industry, they don't open up accounts for third-party solo 401k plans. They don't even offer their own solo 401k plans, as well as a census won't open up accounts for third-party plans. So our clients, though, are finding plenty of other good options. For example, Fidelity and Schwab, just to name a couple. So you can have your plan documents through my Solo 401k Financial, where it's going to be a custom drafted plan that's going to allow for all the features that are allowed under the rules. So the Mega Backdoor Roth, among many other top use cases or features that our clients are looking for. Keep in mind that even if you already have a basic solo 401k plan, it can be upgraded to our plan. And then you can take advantage of the features as well as qualify for $1,500 in solo 401k tax credits, which would more than offset our fees for the first 7 years. So let's start to go through those missing features and why the self-directed solo 401k plan beats the basic Vanguard solo 401k plan every time. So we already established the number one missing feature is the fact that the Vanguard slash Ascensus solo 401k plan doesn't support the Mega Backdoor Roth solo 401k. So what is the Mega Backdoor Roth solo 401k? Well, that's referring to a contribution strategy where you'll end up with potentially up to $70,000 or even more if you're age 50 plus for 2025, where those funds end up in a Roth account. And just like any Roth account, you've got the potential for tax-free growth. Now, specifically, you need to have a plan that allows for, number one, the ability to make voluntary after-tax contributions, because that voluntary after-tax contribution limit is really the overall limit. That's why you can go all the way up to $70,000 if you have the self-employment income to justify it, and you've got a plan like the one offered by my Solo 401k Financial that allows you to make those after-tax contributions. The other step in the process is then converting those funds from the voluntary after-tax Solo 401k sub-account to either a Roth Solo 401k or Roth IRA. Now, Of course, at a minimum, you'll need to have a plan, meaning plan documents that allow for both the after-tax contribution and then the subsequent transfer to the Roth. That's the minimum. But then it's also going to make sense to work with a provider like my Solo 401k Financial that has deep experience in helping thousands and thousands of customers like we have make these Mega Backdoor Roth Solo 401k contributions. Number one, because there are specific steps that have to be followed. For example, it's a two-step process. You first have to deposit the funds, the after-tax contributions, into a separate after-tax account before you move them over to either a Roth Solo 401k or Roth IRA. So you want to not only have a plan, but also work with a provider that has experience. And then number two, also provides the ongoing compliance support as an optional free service like my Solo 401k Financial does. So even though that first step of making those voluntary after-tax contributions, even though that doesn't need to be reported on the personal tax return or the business tax return, the second step when you move the money from the after-tax account to either a Roth Solo 401k or a Roth IRA, that does need to be reported. It needs to be reported on a Form 1099-R. And we handle that 1099-R as an optional free service for our customers. Customers just have to let us know about that after-tax to Roth transfer. We have an online form that they can use to do that, to let us know, to provide us the information we need to then add their plan to the queue to prepare the 1099-R that needs to be issued to report that after-tax to Roth transfer. Now, what are some of the other missing features? What are some of the features of self-directed solo 401k plans that are not available with the basic Vanguard/Ascensus solo 401k plan? Well, another missing feature that's a top use case is the ability to invest in alternative investments. So with our solo 401k plan, of course, you can invest in typical brokerage type investments like stocks, bonds, mutual funds, but you can also invest in true alternative investments like real estate, cryptocurrency, private equity, pre-IPO stocks, among others. So when you have that Vanguard basic solo 401k plan that's really outsourced to a census, they limit you to a menu of Vanguard mutual funds. Whereas with our solo 401k plan, you can open up accounts at the bank or brokerage of choice. For example, Fidelity, we're going to be able to invest in all types of Fidelity investments, stocks, bonds, mutual funds, etc. But in addition, because that account is governed by our plan documents, you could even also diversify into non-traditional assets such as real estate, crypto, pre-IPO stocks, precious metals, etc. Another missing feature with the Vanguard Solo 401k plan is that it doesn't allow you to take a 401k loan. So a 401k loan is where the solo 401k participant will literally withdraw money from their solo 401k account, transfer it to their personal account. And it's not going to be subject to taxes or penalties as long as it's documented as a loan within the loan limits and paid back according to those loan terms. So what are those terms, those limits? Well, you can borrow up to 50% of the balance, not to exceed $50,000. It needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%. And then again, it needs to be documented. So we handle those loan documentations, or those loan documents, I should say, as an optional free service for our customers. We have an online form customers use to prompt us to prepare those loan documents. The tax credits, I alluded to this before. So our plan will make the self-employed business or individual eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. And those are tax credits, not tax deductions. So it's a dollar for dollar reduction in the individual's tax liability. And these tax credits are not only available to new plans, but even pre-existing solo 401k plans that are upgraded to our plan. So this is, again, another missing feature with the Vanguard Solo 401k plan. Their plan that they really outsource to a census is not eligible for the tax credits, because in order to be eligible, it needs to come with a auto enrollment feature, which we automatically add to the plan. We prepare the required notices, etc. Now, part of that auto enrollment feature is that it establishes a default 3% contribution percentage, but the solo 401k participant has the right to opt out of that default 3% contribution percentage. And just because they exercise their right to opt out of the default 3% contribution percentage doesn't mean that the plan doesn't include the required feature. Therefore, they would still be eligible to claim the credit, notwithstanding the fact that they exercise their right to opt out of the default. And opting out of the default simply means that they'll be able to contribute in whichever amount or schedule they prefer, obviously subject to the limits and the deadlines. 5500 EZ support. Again, another missing feature with the Vanguard Solo 401k, really a census Solo 401k plan, is that they don't handle the 5500 EZ, whereas we do as an optional free service. So the 5500 EZ refers to a form that needs to be filed for the Solo 401k plan once the value of the plan exceeds $250,000. And that's also including the value of any defined benefit plan that might be sponsored by the self-employed business. So you've got to factor that in to see if you've met the threshold. Once the threshold has been met, the 5500 EZ needs to be filed. Now, this is an informational tax filing. We handle it as an optional free service for our customers. They just have to let us know once the value exceeds $250,000, and then we'll add their plan to the queue of plans that needs to have a 5500 EZ filed. And we handle that via the electronic filing system to make it easy for the customer. In-plan Roth conversion, as well as employer Roth contributions. Again, missing features with the Vanguard/Ascensus Solo 401k plan. These are additional ways that clients can accumulate funds inside their Roth account. Number one, in-plan Roth conversion. This is where you convert money that's already in your Solo 401k in a pre-tax status. Could be pre-tax contributions. It could be pre-tax dollars that you rolled over from, say, a former employer plan or a non-Roth IRA. So the plan would allow you to then transfer those funds from the pre-tax account to the Roth account. Of course, that's going to be taxable for the year of the conversion. It's going to be reportable for the year of the conversion. And we handle that required reporting as an optional free service for our customers. They just have to let us know about that pre-tax to Roth transfer to prompt us to prepare the 1099-R. In addition, our plan will allow for employer contributions to be made as Roth contributions. This is a new type of contribution that can now be made thanks to the Secure Act 2.0. But you need to have a plan like ours that allows you to make employer contributions as Roth contributions. Vanguard Solo 401k plan, Ascensus Solo 401k plan does not allow for employer contributions to be made as Roth contributions, does not allow for pre-tax funds to be converted to a Roth Solo 401k plan, whereas our plan allows for both. Checkbook control. So again, if you have your Solo 401k through Vanguard, really you're going to have a Solo 401k through Ascensus, which means your money's going to be with Ascensus. Whereas with our plan, we don't control or have access to our clients' funds, but we're very hands-on in helping them set up accounts. So these could be bank accounts where they've got checkbook control, even brokerage accounts where the client has checkbook control. For example, Fidelity and Schwab just both offer a free checkbook. Why would you want to have checkbook control? Well, for those that want to, for example, invest in alternative investments, having that checkbook control allows them to act quickly to take advantage of investment opportunities because they can literally write a check to transfer the funds to make the investment. Flexibility to open accounts. So again, we are neutral, but still very hands-on in helping customers open up accounts. So we've got customers that have opened up accounts at Fidelity, Schwab, E-Trade, among other brokerages, as well as at hundreds of different banks and credit unions. Different employer contributions, just additional customization that's supported by our plan document that's not supported by the Vanguard/Ascensus Solo 401k plan. So this would apply to a situation where there are multiple participants in the Solo 401k. Let's say it's two spouses that are both working in the same business, both participating in the Solo 401k. One spouse may want to make a certain percentage of contributions to the solo 401k as an employer contribution. Let's say spouse number one wants to contribute 25% of the W-2 wages from the S corporation, whereas the other spouse maybe doesn't want to make any employer contributions. Well, with the Vanguard and Ascensus Solo 401k plan, those employer contributions need to be the same. So something's got to give. But whereas with our Solo 401k plan documents, it's going to allow for customization. It's going to allow for each participant to make employer contributions in whichever percentage they prefer. All right, thanks for checking out today's session. If there are questions, again, we've got a little bit of time, so don't hesitate to chat it over, and we'll be happy to go through your questions or topics. If the information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. In the meantime, we invite you to our community, mysolo401k.net/my community. It's the largest community of solopreneurs, solo 401k owners. We've got over 30,000 members, which means vibrant forums. We have a library of videos and webinars. So there's tons of ways to learn and share the knowledge. Well, it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.